Welcome to another video of Financial Indicators, video number 6 by Fahad M. Gohar. The video today will be talking about the subject of the ISM, which means the Institute of Supplier Management, and also we'll be talking about the PMI, which is the Purchaser Manager Index. Those are very important indicators. For example, what the ISM means exactly. The ISM is the Institute for Supply Management, of course. The ISM index is an economic indicator based on surveys of purchasing and supply executive in various industries. It reflects the economic health of the manufacturing and service sector of the economy. The ISM index is composed of several different sub-indexes, with the most one and the famous one is the PMI. So the PMI is the Purchasing Manager Index, is a monthly indicator that measures the economic health of the manufacturing and the service sector. The PMI is derived from, of course, monthly surveys of private sector's company, usually above 400. It tracks changes in production, new orders, employment, supplier deliveries, and inventory. Now, let's see. How is it calculated? There's gotta be a way to calculate this PMI. The calculation starts with new orders, which represent about 30%. This reflects the level of new orders that manufacturers receive, which is a direct indicator of course future production. Then comes the production, which is represent about 25%. This measures the current production level of a company. Then comes the employment, represent about 20%. This indicates the level of employment in the manufacturing sector. And then comes the supplier delivery. Supplier delivery, of course, this tracks the speed at which supplier deliver goods to manufacturers. Of course, faster delivery typically indicate stronger demand. This is very important, because if that delivery takes too long, there is an issue, and it takes too short, also there is an issue here. And then the fifth one is the inventory, which represent about 10%. This reflects the level of raw materials and goods in stock, which can signal, of course, future production issue. So now let's see how we interpret the PMI. So now let's see how the PMI is interpreted. Of course, the threshold is 50. If anything above 50 would be different, result. If the PMI is below 50, there will be a different interpretation for it, of course. There is one thing you have to understand here. First of all, that the longer the delivery time is, this is generally considered a positive sign within the PMI, of course, as is often indicates what the supplier are busy due to strong demand, which could lead to delay in this area. But here, shorter delivery time will mean what? This is typically viewed as a negative within the PMI framework, as it might suggest that demand is weakening and supplier can fulfill order more quickly due to fewer orders in the pipelines. So now let's say if it is natural, there will be no change if it is just on the 50. But if it is above 50, of course, we call it economic expansion. Means the economy is doing well, delivery takes a longer time, because the supplier cannot fulfill all delivery because there are huge demand for them. But if it is below 50, it means what? It means there is economic contraction, which means there is a shorter delivery time because there are so many less orders, so the production line of the supplier, they can produce it very fast, and deliver it on a timely basis. So always watch for your PMI. Is it above 50 or is it below 50? Above 50 economic expansion, below 50 economic contraction. Okay, so now let's see the element that involved in building the ISM and the PMI. What element? Because those are the important stuff, and those elements, it gives you a picture, what's going on, as we have explained earlier. So the element first would be what? The survey data. Survey data is information, of course, is collected, through survey of purchasing managers, approached by, of course, the person who's doing the survey to collect all this information. This is one, element we use. The other element will be what? Seasonal adjustment. The raw data is adjusted for seasonal factor, such as, could be the weather, holidays, some issues economically, so you adjust everything accordingly. Okay, then weighing of what? Each of the 5 components, of course, which is the new order, production, etc., is given a specific way to calculate the final PMI. And finally, we do the compilation. The data is compiled into a final index that is released on a monthly publication. Okay, now let's see what's going to happen if the ASM or the PMI is above 50 or if it is below 50. First, let's go with the interest rate. What's going to happen to the interest rate? Okay, no, we know that if a PMI it's too high, it adjusts. Of course, what's going to happen? The interest rate will be adjusted, to go high. Why? To dry up funds for businesses and investors, to slow down the economy and control inflation. Because if the economy is going too fast, expanding, that will cause inflation. So at that point, we need to raise the interest rate to slow down the economy a little bit. Okay. Now, what's gonna happen to the business forecast? Of course, the business forecast, they will see a better demand for the future when they see the PMI is above 50, and they will have a better expectation for the future, of course, which means more productions coming up, and service will be expanding, and they will grow their manufacture and borrow money and all that stuff, in order to expand. So the business forecast, it will be looking forward as a positive. Now, how about the stock and bond prices? Of course, the stock and bond prices is part of the companies and company who make production, and in a situation where the PMI is above 50, it signals what? Signals a good time ahead and encourage investment in stocks and bonds. So it's gonna go up. How about when it's down now? It's below 50. What's gonna happen to the interest rate? If the PMI it's below 50, it adjusts. Of course, the interest rate is going downward to make funds available for business expansion and investors to borrow to push the economy forward, because now the economy is slow and we need to grease it up with low interest rate, so the interest rate will go down. How about the business forecast? What's going to happen to it when the PMI is below 50? Business forecast, of course, will notice that there will be less demand in the near future, and plant production, of course, and services will be reduced, for the future in order to avoid losing, money. So the business forecast will go downwards. Now, how about the stocks and bond? What's going to happen? Of course, this will, below 50 will signal what? Bad time ahead. And of course, that will prompt caution investment and stock and bonds. And usually people go with the bond investment in a situation like this as more safer investment in a situation like that. So now this is just here a chart to show you for the manufacturer PMI, and non-manufacturer means services, throughout the months, how they interact with one another. And you can see, this is the 50 line, and usually most of them, they come, around the above 50, most of the economy, except, if the economy is not good, then you will see both these charts and the fitted line here will be going downwards. Now, I hope this is what's successful introduction to the PMI.